if you sort of think about it, I guess, operator and contractor are starting at a fundamental difference. If you're operator, you're going to want everybody that's on site to have, hopefully as much insurance as possible,
Right.
protecting you ultimately through your knock for knock indemnities, et cetera. On the contractor side, insurance, I think, is typically viewed as something that's ultimately eating into my margin.
Welcome to An Ounce of Prevention, the podcast. At our recent associates, we believe that an ounce of prevention is worth a pound of cure. Our daily commitment lies in informing our clients about legal risks without hindering their business objectives. As we like to say, we're in the business of building companies and helping executives sleep at night. So stay tuned. Maybe you'll learn something that'll help your business grow and thrive.
Hi, I'm Rachel Reese. Today we're being joined by Phil Lukefahr. Phil serves as Senior Vice President within the Natural Resources Group at CAC Specialty. His company, CAC Specialty, is pretty cool. They're 100% employee-owned with 25 offices nationwide. They've got over 5,000 clients and place approximately $2 billion in premiums every year. So I'd say Phil knows what he's talking about. Welcome, Phil.
Thank you, Rachel. Thank you for having me. Exciting to be here.
Yeah. I'm excited to have you on our very first episode.
I know. I'm very hononered. Very honored.
Yeah,
Y'all done a
it's
nice
good.
job. It looks great in here.
Oh, thanks. Yeah, we like it.
Yeah.
Got our little trinkets.
Yeah. I don't know how, we'll have to see how the take up is with starting with an insurance episode, but
I think
we'll give it our
people
best shot.
Yeah. Well, we get these questions all the time about these tiered insurance programs. So I thought this was a great place to start. And I know that you and I have talked about this over the years several times. So we're going to talk about tiered insurance programs today, and then stick around afterward for our much-loved case law update covering the Corporate Transparency Act. Okay, so like I said, our companies have this solution that we've been employing for a while when it comes to insurance requirements under MSAs. So before we kind of get into the solution, let's identify the problem. Can you talk about the tension between operators and contractors when it comes to the amount of insurance that's being required?
Yeah, absolutely. It's a question, one of the most frequent questions that we probably get throughout any, annual period. If you sort of think about it, I guess, operator and contractor are starting at a fundamental difference. If you're operator, you're going to want everybody that's on site to have, hopefully as much insurance as possible,
Right.
protecting you ultimately through your knock for knock indemnities, et cetera. On the contractor side, insurance, I think, is typically viewed as something that's ultimately eating into my margin. And if you sort of step back and you look at what's going on in the property casualty energy insurance world, insurance is getting harder to get.
Oh, for sure.
There's less optionality and costs are going up. There's a variety of reasons for that. So if you're sort of the small independent contractor, insurance is becoming more and more of a burden, both from a cost perspective, but also just from a, managing my business around this insurance. And so what we've seen, and to your point that you're getting to in terms of the tiered system, a lot of times an operator will just say, hey, we require every vendor to have a $25 million excess limit, to be able to work for us. And the problem with that is, the catering company does not bring the same risk profile as the completions contractor, right? So
Exactly.
kind of one of the things that we have developed that we share with our clients is, to your point, the tiered contractor system, which is basically we've categorized the way that we've looked at it into 4 different categories. And basically, depending on what contractor you're engaged with and which sort of column that they fall in would be it ties in with the appropriate limit that you would request. And it's sort of, tiered based on what we think the risk profile is.
So, so the solution is this tiered insurance program, right? So what you're saying is there are going to be different tiers for different types of risk profiles?
That's right. That's right.
Great.
So somebody going over hole, down hole, obviously, much different than, again, Sparky the welder who's coming out to do a little, project on, whatever it is. And so, but it makes sense. And I think, it just a flat limit. I would argue the same thing, is if you just said 25 million as an example, well, is that enough for the completions contractor? A lot of times it's, depending on the big frac and, the size of the frac job, that number may need to be higher, right?
Yeah.
So I think it cuts both ways.
So now, are most of your clients putting these tiered requirements into their MSA up front, or are they waiting for pushback from the vendor?
Yeah, good question. We see both.
Okay.
We will have clients that just sort of say, within the MSA, we've identified you as a tier. They'll list sort of the tier 1 through 4 and what the requirements are from a limit perspective. And so they'll identify in the MSA, you qualify as a tier 3 vendor, therefore please refer to exhibit A or B or whatever. And then a lot of times just internally, the GC or whoever will look at the contract and just internally, they won't talk about the categorization system, but they're going to go, this is a tier 3, so we need to require 20 million. And so that's just the requirement that's put in.
Okay. So what's the result been? I mean, does it move the contracts any faster? Is there what preferred way?
I think so. I think, we see a lot of this matter, of course, is in the outskirts of the Permian and New Mexico and North Dakota. And so, there are areas in which just the supply of vendors is not there. And it doesn't mean that these people don't do good work or don't have the right HSE things in place. And so I think, it allows our clients to operate with a little more comfortability and a little more flexibility, and still feeling good when they go to bed at night that they've managed things, appropriately. And there's not going to be some huge loss that is going to be dangling out there that, impacts the balance sheet.
I mean, fingers crossed.
Fingers crossed. Yeah. Yeah.
Attention, all you deal makers in the Houston area. Get ready for the inaugural Dealmakers Haunted Hall Gala on October 23rd at Meow Wolf Radio Tav. It's going to be a night of networking, giving back, and some spooky thrills. The Dealmakers Haunted Hall Gala is your chance to meet with industry leaders while making a real impact on the communities we serve. This event isn't just about fun, it's about giving back to those in need. We're looking for sponsors to help make this event a success. With sponsorship levels ranging from $2,000 to $5,000, every contribution goes towards supporting local communities and making a difference where it matters most. The more sponsors, the greater the impact. We need your help to make this unforgettable. Visit www.rreslaw.com for information about events, tickets, and sponsorships. Email rlamphere@rreslaw.com to sponsor and be a part of something bigger than just an event. Let's make Halloween one to remember. Dealmakers Haunted Hall Gala, where the networking meets charity in the spookiest way possible. Okay, so let's switch gears a little bit.
Okay.
There's this situation that comes up a lot where, the operator has a guy, right? Worked with this guy before, love him. He used to work for XYZ service company, but doesn't work there anymore. He wants an MSA with just his brand new startup company.
Yep.
Obviously, he doesn't have 25 million in
Yep.
excess. What do you recommend in that situation?
I think, first of all, in this varies state by state, but in the state of Texas, the first thing that we talk to our clients about is does this person meet the definition of a contractor who can qualify for your workers' comp? It's a 3-tiered trigger. This person would have to work exclusively for your company on a contracted basis.
Yeah.
You would have to supply equipment, tools, and or training. And the third would be this person would have to work exclusively for you and no other operators in the area, as an example. So that's the first place we look. If we can get them covered under workers' comp, that's the best solution for everybody, including the contractor. Sometimes that works, sometimes it doesn't. When it doesn't, I think it's having a strong contract in place is important. But ultimately, our clients have to make business decisions. And again, I think this is exactly what I referred to a second ago. We joke, that's what we say in the office, the Sparky the Welder scenario. And sometimes you got to have Sparky the Welder out. And,
Right.
and that's the way it goes. And that's just a business decision. And you kind of go in eyes wide open with that.
The workers' comp solution is interesting because by and large, my clients would be like, oh, no, that's too close to being an employee. We don't want to have all of that extra liability. And so in my experience, they hardly go that way. They're like, no, lawyer, you figure out a way to contract around it.
Yep. That's right. Yeah, we get some pushback on that from time to time, but I think given that, the workers' comp is sole remedy, there's just a lot of advantages for, the operator or whoever it is that we're talking about, the client, to have that, to absorb that risk internally versus kind of letting the chips fall where they may.
Yeah.
New Mexico's an anti-indemnity state. There's always different factors at play that can influence something from, bad to worse perhaps. And so,
For sure.
But yeah, it's an interesting question.
And then there's also those staffing agencies, right? So that's a solution that's often employed by our clients, where they're like, well, we don't want them to be on the cusp of being an employee, and therefore we don't want to mess with workers' comp, but we need that insurance.
Yep.
And so they're willing to pay that additional fee for the staffing agency, basically just to have that insurance
That's right.
backing them up.
That's right. That's exactly right. Yeah.
Yeah.
We see that quite a bit, especially in our sort of smaller PE-backed portfolio companies and stuff like that. Yeah.
Yeah.
So yeah, it's interesting.
You said business risk, right? Risk analysis.
Put it on the scale. Sometimes you just need Sparky.
Yeah.
Yeah.
Okay, so how about when you're working with a well-controlled company,
Mhm.
right? That's a completely different scenario, as we all know. That kind of all the rules go out the window.
Yep.
So tell me a little bit about how you do those insurances.
Yeah. So the first thing that I think we always advise our clients, we want to have an MSA executed with, CUD or Wild Well or whoever it is ahead of time. We
Mhm.
want to have that language ironed out, and the time to be negotiating terms and conditions and language is not when the well's shooting, fire, 80 feet up in the air type deal.
I mean, most of the time they're just like, we're here. We're not signing a contract. You will deal with it later.
Yeah, exactly. So I think, I want to say we really like to start there and just kind of have that sort of done on a precursory level. It's different. The drilling contractor, I think, brings a lot of potential, GL sort of third party risk with it.
Yeah.
Once the well's blowing out, that's now the responsibility is on operator shoulders.
True.
And at that point, I think the thing that I would be most worried about is making sure that those indemnities read correctly, because essentially you have a group of humans who's about to throw themselves in harm's way.
Yeah.
You want to make sure that Wild Well is going to be responsible for their folks in the event something happens. But if you ask for a number, these guys do risky stuff and they're doing it all over the planet. I would say, maybe at 25 million would be a decent place to start for a well-controlled contractor. But I really think it's making sure you've got that contract ironed out where the knock for knock's there and you're not worried about if something may go wrong, because that's somewhat probable in that situation.
Yeah.
Yeah.
I mean, they're coming in to deal with an actual emergency.
That's right. That's
so.
right. Yeah.
Yeah.
And it's pretty crazy, the stuff they do. It really is.
But hey, it's all reflected in their rates.
That's right.
They're not the cheapest contractors.
No. That's right. They know, they see you coming and they know they got you. It's a Berkshire Hathaway, the Berkshire Hathaway of well control. Yeah.
Exactly.
Yeah.
Exactly. Okay. Well, hey, any final thoughts for our listeners?
I don't think so. I would just like to say, if you're out there listening, this is one of the best people in the game, and I'm honored to be here, and really appreciate you having me.
Oh, thanks, Phil. It was great having you as well.
Yeah, thank you.
All right. Well, Phil's going to come back for another episode, so stay tuned for that. If you'd like to be a guest on our show or have any questions or ideas for the podcast, please email us at podcast@rreislaw.com. Instead of a case law update, today we're going to talk about the latest with the Corporate Transparency Act. On January 1st, 2024, the CTA went into effect and required all companies registered with the Secretary of State or similar office to submit beneficial ownership information reports, disclosing the information for anyone who owns 25% or more of the company to the Financial Crimes Enforcement Network, or FinCEN. The stated purpose of the law is to prevent money laundering. Since then, the CTA has been faced with a slew of legal challenges and complaints. The courts went back and forth on the enforceability of the CTA, and due to a series of injunctions and repeals, the CTA has been an on-again, off-again nuisance for business owners everywhere. In February 2025, the CTA challenges were settled, and reporting requirements were back in effect with a deadline of March 21st, 2025. Well, in March 2025, the U.S. Department of Treasury announced that they would not be penalizing companies that filed their BOI reports after the deadline. But then they came back a couple of days later and promised not to enforce the CTA's penalties against domestic companies and U.S. citizens at all. As of now, FinCEN is accepting comments on their interim rule to that effect and has yet to finalize it. But if anything changes, we'll be covering it right here on An Ounce of Prevention.
The information and material in this episode is general information about our practice and firm and is for educational and informational purposes only. This information does not offer specific legal advice, and the use of this information does not create an attorney-client relationship with RRNA or any of its attorneys. The information in this episode, or any episode of An Ounce of Prevention, should not be considered legal advice, and persons should not act upon this information without first engaging professional legal counsel.
Thank you for listening to An Ounce of Prevention, presented by RRNA.
If you found this episode informative, subscribe to our podcast to stay up to date with future episodes, case law updates, and breaking news. If you have any questions, or if you are interested in learning what RRNA's outsourced legal department can do for your company, reach out to us at podcast@rreeselaw.com or call us at 832-831-2289.